Good afternoon, and thank you for joining us as we walk through some of the strategic impacts that are happening out there in the loan industry with you guys, Guarantee Home Mortgage Corporation. I myself, Rob Jepson, along with Nathaniel Turner, Leon Foster, and Steve Osmond, are going to walk you through the presentation today. The executive summary, the things we're going to cover today, we're going to go through the background of the company quickly, talk about the strategic direction, Porter's five forces, basically what is impacting the industry, and then the driving forces, again, looking deeper into the industry, and then the key success factors moving forward for any loan office, and then look at the strengths, weaknesses, opportunities, and threats in a SWOT analysis.
Background. Guarantee Trust Company was founded in 1986 by the vision of Mr. Wendell Mandrell. With less than 5 employees, the mission was then, and still remains, to improve the mortgage process for the consumer and to do things with a sense of urgency and compassion. After nearly 30 years at the helm, Mr. Mandrell stepped down as the president and CEO. Ms. Rita Gardner took over these roles in 2013 and helped Guarantee Trust Company become one of Tennessee's top places to work, one of the top 100 mortgage companies, as well as a top 25 mortgage lender in Nashville, to name a few accomplishments. As 2019 dawned upon us, Guarantee Trust Company changed their name to Guarantee Home Mortgage Corporation. More recently, on April 8th, Brett Arsta took over as only the 3rd CEO of the corporation. Guarantee Home Mortgage Corporation offers a variety of mortgage products for both residential and commercial customers. Strategic discussion. Guarantee Home Mortgage Corporation's strategy is that of a broad differentiator. With mortgages in 32 states and availability in the 48 contiguous states, Guarantee Home Mortgage Corporation has a broad market base. In order to be a broad differentiator, you must have a unique set of products and/or offerings. Guarantee Home Mortgage Corporations makes themselves unique by offering programs such as conventional, jumbo, FHA, VA, and rural development loans. Working with Guarantee Home Mortgage Corporations means you will receive friendly personal service from a hometown team.
Porter's five forces are part of every industry. Guaranteed Home Mortgage Corporation also has to deal with these. 1, intensity of competition. The company faces intense competition. It's the region's 15th largest mortgage provider in the area, according to Nashville Business Journal. All the home mortgage firms are seeing the market cool, but they are still subject to shareholders' performance expectations. The industry is neither too broad nor too narrow, and within this space, firms feel comfortable to compete. 2, bargaining power of supplier. The bargaining power of suppliers is not applicable. The mortgage companies lend their own money directly. 3, bargaining power of buyers. Buyers have a lot of bargaining power. Buyers do not have a lot of will to refinance because the loans purchased had very low interest rates. The market has been very hot for 3 to 6 years, but now new originations on home loans are cooling, though still profitable. Buyers feel free to shop around because the market is permitting them more time. The buyers need a lot more incentive to refinance. 4, threat of new entrant. The threat of new entrants is neither strong nor weak, or rather moderate. The housing market is cooling towards normalization. There's still profit to be made. New banks and credit unions usually do mortgage loans, and so entry will still appear attractive where a market segment shows any demand. Practically speaking, most banks and credit unions are all potentially sleeping giants. threat of substitutes. The threat of substitutes is quite high. Getting money from the parents, also called the bank of mom and dad, are allowing interest-free finance loans with no underwriting or credit checks. If they default on the loan, they get more. By proxy, living at home with parents, living in an apartment, renting from a friend with a home are ways to live without purchasing a home and thus without a mortgage.
Like all other industries, there are the driving forces for the Guarantee Home Mortgage Corporation. Inflation is one of these driving forces. The higher the inflation will result in the higher mortgage rates, and then vice versa will happen as well. With these interest rates, we understand as the inflation increases, this will directly reflect on how much that mortgage interest rate will be, since the mortgage rates usually are the X amount from the mortgage plus the current rate. So when those do increase, so will the interest rates and make it less attractive to the potential clients. Then the state of the economy is another force. With a bad economical news hitting, there'll be a lower interest rate, and this will increase the issues for potential clients. If the bad economic news hits, they'll be less likely to want to be able to obligate themselves to doing into a mortgage and finance, as well as the financial stability and setup of your potential buyers. If they have a bad debt ratio, they're going to definitely want to be able to avoid getting into more obligations. The supply and demand, third force of the driving forces, is with the high demand towards high demand for lower costing housing to be purchased for rental purchases, which is the higher drive going on currently. Therefore, it's also to be able to see that the higher costing houses will result in a lower demand from potential clients. This leads right into the property types, where the rental properties are becoming more and more common, requiring a different type of loan analysis to be set up than what it is with the primary homeowners. Primary homeowners are looking to be able to buy the home and then stay there, where the rentals will have a higher interest rate to be able to go through with a mortgage and purchasing to be able to be rented out by others.
The key success factors in the industry are fourfold. The first is building brand awareness. Investing in brand building and shaping a positive reputation need to be at the forefront of any lending corporation to stay in the industry. Looking at the largest player in the industry, Quicken Loans, their name is everywhere and by far the easiest to find on the internet. That is what we see for Guarantee Home Mortgage Corporation. Now, second, looking at data integrity. We have to be able to measure the market penetration, our advancements in local markets, and understand customer expectations when they interact with our company. Looking at the digital prowess and presence, there needs to be an ease and speed for the customer for entry and approval to get them from start to finish as quickly, as easily, and with a family-friendly notion as possible. And it is also where younger generations thrive. Their expectation is that from any device, by any means, they can get on to Guarantee and get set up. The last is managing the renting trend. As prices skyrocket, as rates fluctuate, the industry needs to understand that rental loan market is going to be a key to future success as community living and renting become more commonplace.
Our team performed the SWOT analysis, and out of the strengths we were finding, the service loans were offered nationwide from Guarantee Home Mortgage Corporation. This is a great plus for the corporation, as well as the option of having many different types of loans being offered. The brand awareness is definitely a weakness, as what was stated previously, And with the outdated information on the website, we had found that many of the things were there that was back from 2015 and hadn't been updated since. There's very few followers or testimonials, considering there's only about 1,300 of their Facebook followers, where an average company of the same moderate size has at least 1,600. And then it was with little to no apparent competitive advantage towards the other competition of mortgage companies out there. The opportunities that we had found was the opportunities to be able to advertise with big players in the demographic areas and sponsorships, being able to get with strategic partnerships and real estate companies. This is a really big bonus, since they're lacking with the knowledge and awareness. They can be able to become friends and acquaintances with more real estate companies, which will get the name out and the word out quickly. Threats to this company right now is the Federal Reserve interest rates volatility, as well as if inflation goes up or down. That's what's going to be afflicting them. Lending service laws changes with independent mortgage companies and regulating. They can be able to flex a little bit better than other bank lenders, but then others can be able to come in, and that's where we're looking at with substitutes from renting for the mom and pop rentals, as mentioned before by Leon, and the renting surge that is going on, where more people are looking to rent instead of purchasing and being tied down by a mortgage.
That closes the first half of our presentation. Thank you very much.